All attendees are in listen-only mode.
Okay, everyone, how are we all doing? This is Neil Green again with you on the weekly webinar. Neil Green again with you on the weekly webinar, this time talking about oil. As requested from you guys, you asked me to talk about oil, so here I'm talking about oil. Today we have the oil inventory event. We had it already, but I want to talk about the effects and what happened to the market and so on and so on. Before we start, guys, I would like you to write me down that you can see my screen and hear my voice. Do a technical check, see that everything's fine. All right, just write me. You have a chat window. By the way, if you have any questions during the webinar, you're more than welcome to write me down. I'll try to answer your questions in between. Of course, I'm going to leave some time, just like I do every week, for a Q&A session at the end of the webinar, questions and answers. And as to your request, I'm going to talk about oil today. As you probably know, I'm here every Wednesday doing 2 webinars since we have customers from all over the world. The first webinar is taking place at 8 a.m. GMT time. We're doing it at GMT time since we have customers, as I said, from all over the world. And the second one is right now 4 p.m. GMT time, London time, talking about the events. I was here last Wednesday. I will be here next Wednesday. Of course, it's for free. And I would like to welcome all our Facebook Live. You guys, welcome. Hopefully, if you work with us, it's great. If not, join us. We're here to make money, and let's talk about the market. Let's start. Okay, this is a homepage. Everybody knows at fmfx.com. Today we talk about oil inventories. Let's start. Okay, the weekly oil report was published, by the way, at 3:30 GMT time, which is 35 minutes ago. Okay, 30 minutes ago. The publication has been gaining straight in the past year and a half. Okay, the reason for that, low oil prices are generating more demand for the inventory report. Okay, when the prices of oil were very high, this oil inventory event wasn't such an important event, but since today oil prices are traded very low, this event of the oil inventory in the United States, which measures the number of barrels that are added to the firms in the United States, is more important than it was before. Market participants are concerned that high inventory could keep oil prices low. Why is that? Think about it, supply and demand, right? If we have more than something, on any asset you trade on, if we have more than something, usually the price, more supply, the price goes down. If we have less, usually the price of an asset should go up because of high demands, all right? So this is just for you to understand the general picture. All right, just to get a bigger picture, every time before we trade on an event, okay, what I like to do is I like to take a look at the bigger picture and to understand what's going on in the world, in this case, what's going on in the market on oil, okay, get the bigger picture and then go specifics in order to combine the fundamental information that I'm going to give you right now with the technical analysis that you know or you don't know, but I'll show you now, in order to become professional traders and make some profit in this market. So you got to know how to look at the event fundamentally, okay, how to read the information, and then you have to do the technical analysis of the chart, and when you combine both together, it makes you a professional trader and you can get high profits. Now, just for you to understand, around 100 million barrels are produced each day in the world. Each day in the world, 100 million new barrels of oil. This is how we drive our cars, fly our airplanes, and warm our houses if you're from cold countries. Now, OPEC. I don't know if you know OPEC. OPEC is the organization of the oil countries, represents 14 countries of oil, and is responsible for around 30 million barrels a day. So we're talking about 30% out of the oil production in the world, which is a lot, is produced by OPEC, all right? Not including many countries that we already know, but including Saudi Arabia, Iran, Venezuela, Algeria, and so on, and Dubai, and so on and so on. So OPEC is responsible for around 30 million barrels a day out of the 100 million barrels, and this is why this is such an important organization that affects the prices of oil strongly. OPEC members like Iran and Saudi Arabia are suffering from low oil prices, right? Oil is currently traded at around $54 a barrel. Oil traded above $100 a barrel 3 years ago in 2014. Just to show you, if you go to the, let's open the MetaTrader. And let's look for oil. Crude oil is marked by CL, crude oil. You see CL, I'm bringing it here, and let's put a monthly, this is a monthly candlestick chart of oil, which means that each candle that you see here represent, let's zoom in, represent 1 month. Right, today oil is traded around $54 per barrel, as you can see. 3 years ago, at around 2014, it was traded around, as you can see here, around $100 per barrel. And why is it important? Because when oil was traded so high, okay, these countries, these OPEC 14 countries, were making a lot of money. Think about it that countries that produce so much oil, okay, the whole economy is based on oil production. If oil prices are high, okay, the demand for oil is higher, and then, you know, they make more money. Right now, when it's half of it, right, we're talking about, you see, 53.90, $54 per barrel, when the price is so low, half a price than what it was 3 years ago, these 14 countries and the countries that are producing and selling oil, they make less money. And this is what makes this oil inventory event, it's a weekly event in the United States that takes place every week, so important, and gives us great opportunities to trade. Okay? So this is the bigger picture of what's going on with oil in the world in the past years. So as we said, 100 million barrels produced each day. OPEC is responsible for around 30 million barrels a day. OPEC members like Iran and Saudi Arabia are suffering from lower oil prices because they make half the money than what they used to make 3 years ago. Oil is correctly traded around $54 a barrel, and oil traded above $100 a barrel in 2014. These are all facts. OPEC is trying to cut production in order to push down inventories and push up prices. Now think about it. If OPEC will cut production, which means they make less oil. If we have less out of something, the price goes up, just like every other thing, you know, in the world. If these countries that are responsible for 30% out of the oil export in the world will produce less oil than what they used to do, okay, price of oil should go up, and then they're going to make more money. But it's a bit complicated, all right? As long as oil keeps trading low, as it's traded right now, the inventory report will continue to generate market volatility as it's been doing in the past year and a half. So these events, we can take opportunity of these events, like the event we had around 45 minutes ago. Then I'm going to show you the effect on the market in just a second, because it gives us higher volatility. For us as traders, volatility is great, right? Because volatility makes trends. High volatility makes uptrends or downtrends. We can make money by buying or selling the asset on both directions. Now, if we know that the price of oil go up, we can always buy it. If we know the price of oil is going to go down by high production and so on, high inventories in the United States, for example, in this event, we can sell and short the oil and make money when the prices are going down. Traders use the report in order to take advantage of price swings after publication. Right after the publication of the oil inventories, the market, oil prices, and other assets that I'm going to show you, they give us great opportunities because the volatility is very high because of the low prices of oil, as I said. And if we identify the trend, we can trade on it and make some serious cash here. Okay. Let me show you the event. You can go to Forex Factory, investing.com, whatever you like to work with. You see oil inventory takes place every Wednesday at 3:30 p.m. GMT time, which was 45 minutes ago, London time. And let's refresh to see the results. Now, the forecast, as you can see, was 1.5 million barrels more than what we had last week, and actually the actual number was the same number, 1.5 million. No surprises. What expected happened, and this is why we didn't have such a high volatility this time. Okay, looking at the price of oil, because the forecast was 1.5 million new barrels, more than last week, and the actual result was 1.5. Wasn't such a big surprise, and oil prices reacted pretty low this time. Let's put a 15-minute chart, and then you can see oil prices went down a little bit in the past 45 minutes, but this is the volatility, and if you recognize this volatility, this time we can make a lot of money by shorting. All right, now looking at this event takes place every Wednesday. Okay, what I'd like you to look is at what's going on with oil in the past few days or past few weeks, and what is the difference. Okay, Jean is asking what is the difference with the Brent oil and crude oil. Pretty much the same. They work pretty much the same. If you look at Brent oil, you're gonna see the same chart. Okay, so it's pretty much the same. You can choose each one, just different types of oil. Okay, great question. Thank you. Okay, now last time OPEC cut production. Let me show you. Last time OPEC cut production was on November 30th. Okay, November 30, the price jumped more than 10%. Okay, let's see. Let's put a daily chart. This is a daily chart of the crude oil, which means that each candle that you see here represents one day. You see this? Let me zoom in for you. You see this green candle right here? This huge green candle represents November 30th. Okay, November 30th was the last event, the last meeting in Vienna of the 14 countries, the 14 members of OPEC. And they've decided, I don't know if you remember, there was sanctions on Iran under Obama back then. Right now, Trump is trying to do other things, but this is a whole other webinar. We're going to talk about it in the future. But they decided to take off sanctions of Iran, and they wanted to make money as well. But the thing is, the prices of oil were too low, so they decided to cut production with all the members of OPEC, and then price of oil went up by 10% in 3 days, which is a lot. All right, if you would buy it here at the opening price of around $45 per barrel and sell it after 3 days, okay, using this fundamental event, fundamental opportunity of the last meeting of OPEC, you could sell it at around $51, $52 per barrel. All right, just for you to understand the numbers. Let's go low. Let's take $10,000 and say that with $10,000, I have a leverage of 50. I can trade as if I had $500,000. All right. The price of oil was $45 per barrel. Okay. Multiply this one by $7 per barrel that the price went up. You could make almost $80,000, 800% in 3 days. This is a lot of money here we're talking, guys. Okay. So last meeting was on November 30th. By the way, if you want to know the next meeting of OPEC, you can go to the OPEC homepage. This is the homepage of the organization OPEC, and you can go here to the press room and upcoming events. The next meeting of OPEC is going to take place, as you can see, on May 25th. Right, May 25th. We're talking about what, 2.5, almost 3 months from now, right? This is no, I'm talking about, yes, 2.5 months in Vienna, Austria, and it's gonna affect, of course, the market strongly, whether they're gonna cut production or not, such as what just happened on November 30. So pay attention to this. Now let's take an overlook of what's going on with oil these days. So price went up by 10%, as you saw. Oil is currently trading in a sideways channel between $50, $51 to $55 a barrel. Okay, showing you on the MetaTrader. This is a daily chart. You see the sideways channel. If I put a support line, let's talk technically. If I put a support line here at around 51 or 50, even lower than that, you can go lower, $50 per barrel. This is a support line, and the resistance line is around here, around $55 per barrel. So we have a channel. You see, it's sideways, which means that every time the price hit the resistance line at 55, which happened 1, 2, 3, 4, 5, around 5, 6 times, the price went back down. Okay, technically this is a huge opportunity, was a huge opportunity to sell oil. Every time prices of oil touched 51 or $50 per barrel was a support line, and these are the prices where the investors and the big money believe in this channel that started on December 12th, as you can see. These are the prices where the investors believe that the prices of oil is too low, and they decided to buy it, more demand, and then price of oil went up. Okay, right now it's traded around $54 per barrel. Okay, now an attempt to break above or below the channel, which means under 50 or over 55, could occur during the publication today. It didn't happen today because the actual number, 1.5 million new barrels in the United States, was as expected. Exactly, the forecast was exactly the actual, and this is why we didn't see such a strong reaction on oil prices. Okay, but we have this event taking place every Wednesday at 3:30 p.m. GMT time. So you can use this information in order to trade every Wednesday on all inventories. Now, just to remind you, as long as the price of oil is so low, $50, $55 per barrel, okay, just to remind you, it was around more than $100 per barrel 3 years ago, we can use this information, okay, because we're going to have high volatility after these events. Of course, if the numbers are going to be extremely low than expected, not like today, or high. Traders can use as well correlation tactics in order to diversify their opportunity today or next week or every Wednesday. Let me explain why. The thing is that in general in trading, if you build a portfolio, let's say I take not a big portfolio but a small one with $100,000, okay, I don't want to put all the eggs in one basket, okay, which means trade only on oil in this event, but I would like to diversify, right, to split the risk. This is right risk management. A real trader would like to do a risk management and split the risk and not put all his money on one asset, but trade on a few assets, okay? On oil inventories event, the correlated assets with oil are the ruble, okay? We're talking about currencies here. Canadian dollar and Hong Kong dollar, which is the NOK currencies. Why is that? These countries, Hong Kong, Canada, and Russia, are huge exporters of oil, okay? Huge part of their economy is based on oil. They depend on it, okay? So these currencies have high correlation with oil and, of course, with the oil inventory event, and are very strongly, extremely affected by that, and it can generate huge opportunities to trade on these three currencies, as well as on the oil itself. High volatility could create movements that are more technical than fundamental, as I showed you, and let me explain why. Back to the MetaTrader. If we had today an event, if the number was much lower, for example, than 1.5 million, okay, as expected, of course, lower than expected, price should go up. Just like cut production, less oil, price goes up, right? More demand. If the price would a breakthrough, the $55 per barrel will go up, it might go up until the next resistance line, if we look at the weekly chart, which is here around $62 per barrel. You see this resistance 1, 2, 3, 4, 5 times, didn't cross 62. If you're gonna have a breakthrough these days, after the next oil inventory or the next event on May 25th of the, let's say OPEC will decide on Vienna on May 25th to cut production with big numbers, okay? And they're not gonna make 30 million barrels a day, or they're gonna product 20 as a decision. Then the price of oil is gonna go up and break through the 55 resistance line. You have a huge opportunity to take it and take profits and put your take profits at around $62 per barrel and make around $7 per barrel, which is huge money, okay? On the other hand, if they're not gonna cut production, if the next oil inventory events every Wednesday in the United States, we're gonna see that there are a lot of inventories, they didn't cut production, they make a lot of oil prices might go down and have a breakthrough of the support line at around $51, $50 per barrel, and go all the way down technically to around $52, $53 per barrel, Okay, so we have opportunities on both sides here. Okay, and you can take trade to the longer term. Of course, if you trade today on the oil inventories next Wednesday, the Wednesday after, I would take the trades until May 25th, until the next upcoming event in Vienna, because then, as I showed you on November 30, you know, it's going to affect the market much more according to what the OPEC countries have decided to do. Great. So we said high volatility create moves that are more technical, as I showed you, than fundamental if you have a breakthrough of the support on 50 or the resistance line at $55 per barrel. Traders can use correlation tactics in order to, okay, we said it, and good luck, of course. Any question, guys? This is the time. Anything you didn't understand you would like me to clarify? And in the meanwhile, I would like to thank all of you guys on Facebook that joined us today. You're more than welcome to open an account with us with FMFX in order to generate some profits. And you guys that are trading with us, you can always contact your account managers to ask for more information. They're lovely guys, so use them. This is what they get a salary for. By the way, if I would like to thank you for all the emails you're sending me during the week. I'm trying to answer all your emails, but you know, trying to do the best. And I'm gonna be here every Wednesday at 8 a.m. GMT time and 4 p.m. to talk about the events. Next week, you're more than welcome to click on the link and join me on. You can find it here on our homepage as well, the FMFX. You just go to join our webinars. And next week, I'm going to talk about the non-farm payroll, about the NFP. Trading oil inventory was today. NFP session is going to take place next week. It's going to take place. And of course, we have on March 15, the huge event of the month, the US rate decision. Then technical analysis session on the 22nd, and on the 29th, the US GDP. All right. You're welcome, Gene. I'm very happy that it was informative. I'm going to be here every week giving you the information about the market. Thank you very much for participating, and have a great week.